Welcome. It's 8:06. Stock market's been open 1 hour, 30 minutes, plus 6 minutes in a new 30-minute bar. 11/7/2012. This is the after effect of the Obama administration. We were just down 305 handles on that Dow Jones. The Dow Jones Industrials have broke 4 weeks below the 10-week moving average. It was an extreme good bull trend. When the 10-week is rising like that, that's what we call bull trends. When you start going below the 10-week moving average, 4 weeks in a row, closing below it, that is a bear reversal from the bull trend. The 50-week simple moving average at 12,884 right now is going to be the major wall of support. Let me just caution everyone on the Dow Jones. When we sold through the 10-week, it took out all the stop markets. When we got through below this red line, which is the 20-week, more selling occurred. The lower end of the longer term 50-week moving average is where you find that bigger support level. However, if the moving average convergence divergence, which is called a MACD reading, if this goes into a weekly sell signal, we would break below this 50-week moving average. I will draw a trend line across here so that people can clearly understand where we're at. And here it is. That's slightly right here. Now, when I go back to the last times, I'm going to draw and blow this part of the chart up. And here's what it will look like as the relevance to these support levels that will come into play right here. So, when we had our first correction, we sold short. This was the mid-year of the 2012. And then we got the great bounces. Now we have a second yearly correction in the broader Dow. Correction 1, big bull rally, and this is correction number 2. These were the last lows, but when we got down to the 50-week moving average over here, we've been rising. Mathematically, the Dow still has a lot of that bull in it because the 50-week, as the 50-week rises, that means that the bear reversal, the bull will have a lot of support. And last time when we responded to the 50-week, we made all-time rallies at the 50-week moving average. Yes, we were below the 10-week moving average, the blue line going down for 4 weeks in a row. But when it got back up in the 10-week, you were closing above it for 4 weeks in a row. That's how we got the last upper end of that 5.5-year high on the Dow. And we covered the Dow on a daily level. But because of the 50-week moving average rising and not declining, that's where the Dow gets the broader support level in the Dow composite, the Dow Jones here, industrials. So basically, rising 50-week, rising 100-week means that, yes, the bull trend is not over yet because of it. It's in a correction as it was over here, and we're correcting here at year end with the election. We'll look and see where the buying opportunities across the board would have support level in the broader equity markets that are deeply oversold that would make great moves off of the bottom. Now, I will caution everyone here. If we go into a weekly sell signal, then that 50-week we're going to go lower and the Dow doesn't have any support where we got back down here in that first correction. There's still a lot below it. There's about, well, the 100-week moving average is going to be 12,405. This is this beige looking line right here, 100-week. Weekly moving averages are very, very important. And when we take a look at a monthly, I will show you what it looks like on a calendar monthly level, because a monthly level, when we start breaking certain monthly moving averages, which are very, very significant, we are below the 10-month moving average for the very first time in a long time on the Dow. That's the blue line right here. This 20-week or 20-month moving average is right about where the 100-week moving average is. Right here. Let's take a look. Here's the 100-week moving average on a weekly, and that's 12,405. Here is the 20-month at the 20-month moving average. is on this Dow is 12,577. If we break below the 10-month, we could see more downside selling, just as we did. So you got the monthly and you have the weekly in this analysis, MMTs. And how do we establish a bull versus a bear? And the bull trend has been in play for several months. It takes several months to break those because you got the lower 20-month moving average right here on the Dow is 12,500. That would be a great buying opportunity. Once again, this is the monthly chart. Once again, the blue line is a 10-month moving average, and we have not been below the 10-month moving average in a long time. And that 10-month moving average on the Dow is 13.023. The Dow Jones right now was down 300 and some handles. You can see here clearly DJI 12951.37. What we do look at is where the deep oversold areas will come in play over the next several trading days, what the ranges will be, and where the stop market orders are. And once those sellers have cleared out of the tape, and once we get a resolution on the fiscal cliff, we could set that next bull rally up. I conclude the monthly chart on the Dow below the 10-month. I conclude here the weekly moving averages. I'm selling below the 20-week. Those are going to be resistance levels. That 50-week right here, the 50-week has been rising. That should give the broader Dow some support level. But if you sell through it, it's going to cause a lot more stop market orders to get triggered, and that's how you sell down below those. That's the conclusion, Dow Jones Industrial Average.